For starters, a good financial plan is not a 30-page PDF that runs through every single financial scenario that could happen in your life. You can make one that long, but from my experience, it's just unnecessary and kind of takes away from the main purpose of the plan itself. A good financial plan helps you define your values and your financial goals, and then it highlights the necessary steps to take financially so that you can reach those goals. So a good financial plan should start with your goals and values, and Carl Richards is one of the most well-known financial planners, and his variation of this, he calls it a statement of financial purpose. For example, if you value family and you want to reach financial independence and want work to be optional at age 40, you're going to approach your financial plan a lot different than someone who plans to retire at traditional retirement age. An example of this would be investing in taxable investment accounts instead of tax-deferred retirement accounts if you plan to retire early, because you don't want to get hit with the penalties that are going to come from taking withdrawals from retirement accounts early. There are a lot of actions and decisions that have to be made to reach your financial goals, which is why this step is so important and why it really needs to be done to be a good financial plan, because without knowing what your goals and your values are, it's almost impossible to start making progress towards them. And this part of your plan is always going to change as life changes, as your values and goals change, as situations evolve. So it's important to revisit it once in a while, maybe monthly or quarterly, just to make sure everything's still on track. Another part of a good financial plan is a current snapshot of where you're at right now. So this would include your current take-home income, your monthly expenses, your monthly surplus, which is what's left over of your income after you pay all your expenses, your net worth, and anything else you'd like to track. Maybe it's debt or your debt payoff progress. To take the snapshot just a little bit further, you could also include your cash flow, which is going to be the money coming in each month and the money going out each month, which is just your income and expenses. And you want to have a good understanding of your cash flow, because any of that extra money is going to be rerouted towards your financial goals. You might include your total debt within your snapshot, but you also want to lay out all the debts that you have, the amounts, the interest rates, and the current payoff dates. This gives you a starting point to work from, and then you can build a strategy to pay them off in the most efficient manner. So this could be paying off the highest interest rate debts first, and then working your way down until they're all paid off. Another piece of a good financial plan is a long-term investment plan. So no matter what your goals or your values are, some form of investing is going to have to take place. Investing allows your money to grow over time so that eventually one day you'll be able to live off the income generated from the investments instead of having to work a job to create income. The nice thing about long-term investing is that once you kind of get a plan and a strategy set up, it's a fairly hands-off experience. There are tactical strategies and things you can do over time to manage your investments, but overall, long-term investing is a pretty passive activity and should be used to work closer towards your long-term goals. Next, one of the most challenging parts of a financial plan to create is a tax plan. And the goal of tax planning is to reduce your lifetime tax bill, not just the amounts that you're going to pay each April. And that's actually a separate activity which is called tax prep and filing, and is a little different than tax planning. So tax planning takes into account your full financial picture, and different strategies that play into this could include funding certain type of investment accounts, or selling certain types of assets, or taking advantage of certain deductions. But tax planning is a very detailed and highly personalized process, so I always recommend to work with a CPA or an advisor just to make sure that you're doing everything correctly and that you're not going to end up with a tax bill that you weren't expecting. A boring but very necessary part of a good financial plan is risk management, and this would include making sure that you have proper insurance coverage, making sure that the costs are appropriate, and occasionally reviewing your insurance policies once in a while to make sure that they're aligned with your current life stage and that all the beneficiaries are accurate and up to date. And the last piece of a good financial plan that we're going to hit on is an estate plan. It's not fun to think about, but just like insurance, it's a necessity, and contrary to popular belief, estate planning is not just something for the ultra wealthy or the super rich. Everyone should have the basics of an estate plan set up, and some pieces of this include creating a living will, naming a power of attorney, naming beneficiaries, selecting guardianship, and creating a trust. So to recap, a good financial plan should include a current snapshot of where you're at, your financial goals and values, your cash flow, debt, an investing plan, a tax plan, risk management, and an estate plan.